Thanks, Joe, and good afternoon, everybody. It's a pleasure to be here. And to grab this thing.
Yeah, it's yours.
A couple of forward-looking statements. Don't ask me why we have two. I think since we're switching gears to copper, just a quick reminder on why it's important. If you look at the supply side of the copper equation, it doesn't look so good. Grades are dropping, and I just saw Oyu Tolgo's report today. Their average grade is 0.56%. That's one of the larger copper mines in the world. So with the build out of the electrical space, electrical vehicles, alternative energy, all of which takes about 5 times more copper, we're not going to see a reduction in demand. So we think we're in a good time period. We're focused on copper, but we have about 8 billion pounds of copper. We also have 3 billion pounds of zinc and over 1 million ounces of gold equivalent precious metals, and a fair bit of cobalt as well. We're focused on 2 projects, as Joe said. Our more advanced is the Arctic project. We've completed a pre-feasibility study. We're working on the feasibility study as we speak and getting the project ready for permitting. I'll talk more about that, as well as introduce you to our exploration project, which is about 20 miles away, called the Bornite project. We've already outlined 6 billion pounds of copper in both open pit and underground potential resource areas. And we're still drilling, and we're still expanding that significantly. What's special about Arctic is its grade. We're in Alaska. It's a safe, mining-rich jurisdiction. But what's special about the deposit is its grade. It's 43 million tons of 5% copper equivalent in an open pit mining scenario. I don't think there's anything else like it on the planet. Post-tax NPV of $1.4 billion, an 8% discount, and a 33% IRR. So this is a high-quality project. I think metal prices and copper prices in particular go higher, but we certainly don't need that to happen to make this a mine. It makes good money at $2 copper. We're up in Alaska. We're in a part of Alaska that is well known to the mining business. The Red Dog Mine is located here. It's been in operation for 30 years. It's owned by Nana Regional Corporation, a local Alaska Regional Native Corporation. It's been operated by Teck originally Cominco, and now Teck for, as I said, 30 years. The distribution of wealth in this mine goes throughout the borough. It supports the borough government, the school district, and the village governments. So it's a mine that has really worked well at getting local support and getting the dollars out into the pockets of people in the region. So it's a great model, and we're proud to be working in there in partnership with Nana. They selected lands in this area as a result of their Aboriginal rights and title settlement with the federal government. We have a business relationship with Nana. They'll receive a royalty, and we work closely with them to provide jobs to the local communities. On the infrastructure side, we are in the middle of the nowhere. We're 200 miles from the nearest road, so we were partnered with the state of Alaska through a group called the Alaska Industrial Development Export Authority to build a road. And they are currently permitting that road that'll connect us to the existing infrastructure in the state of Alaska. This is exactly the same model that was used to develop the Red Dog Mine 30 years ago. So we'll be hauling our concentrates in trucks down to Fairbanks, and then by rail down to the port in Anchorage, and then we'll haul the concentrates, load the concentrates in the bulk freighters bound for Asia, markets in Japan, Korea, and no doubt China. Our last partnership is with a company called South 32. We haven't quite formed the joint venture yet. This is the last year of a 3-year option. It was a total of a $30 million series of option payments they made to us. This is the last year. But my guess is by the end of the year, we'll be in a joint venture with South 32. If they elect to form the joint venture, it's a 50-50 joint venture, and they write a check for $150 million. So we have no need to finance for the foreseeable future. So let's talk about the assets themselves. This is the Ambler Mining District. That's a 100-kilometer-long belt of volcanogenic massive sulfide deposits, copper, lead, zinc, gold, silver. And we'll talk about bornite in a second. We've been focused on developing the Arctic deposit, which is a very high-grade, open-pittable resource, 43 million tons. You can see the grades there, over 2% copper, 3% zinc, a little bit of lead, and then the precious metals. It's a fantastic deposit. Because of its geometry, it can be mined with an open pit, 7-to-1 strip ratio. Again, I just don't think there's anything else like it on the planet. Very, very high quality asset. We've completed a pre-feasibility study last year with Ausenco, Emick Foster Wheeler, and SRK being the primary contractors on various parts of the pre-feasibility study. 12-year mine life, 10,000 ton a day open pit mining operation, 7-to-1 strip ratio. You're producing about 160 million pounds of copper, about 200 million pounds of zinc, 30 million pounds of lead, 3 million ounces of silver, and 30,000 ounces of gold a year. We've got lots of exploration upside, so I'm not worried about the 12-year mine life. It's a good place to start. Capital costs are a modest $780 million. You're generating C1 cash cost for producing copper about 15 cents net of the byproduct credits. And on a total all-in cost, you're including all your capital and your closure costs, you're about 63 cents a pound. Again, very, very robust economics. That generates the 1.4 billion post-tax NPV8 and a 33% post-tax IRR. Again, we don't need higher metal prices to make this a real mine. You're generating about $450 million of free cash flow a year. So you pay this thing off in 2 years when you go to put the capital in here. It is a whole district, so obviously there's lots of other dots on the map where got a lot of exploration upside in the district. We are starting to think about permitting the mine now, so we're getting all of our ducks in a row, completing a feasibility level work, basically in support of the permit applications. That work will be undergoing, or is undergoing right now and throughout the summer. And we only need one federal permit. If you're familiar with permitting in the U.S., it's not a fun process, no question about that. But we only need one federal permit from the Corps of Engineers. We're not working on federal land, so that eliminates a whole raft of various federal agencies. Most of the rest of our permits, actually all of the rest of our permits, come from the state of Alaska. Our mine operating permit, our dam operating permit, the air quality permit, and the water discharge permit. So Alaska is a good place to do business. We know the place well, and we'll look forward to starting the permitting process there. So that's Arctic. As I said, we've got lots of other VMS targets identified on the belt. There's over 30 known deposits. We'll be flying a VTEM survey this year, so we'll no doubt generate more targets as a result of that detailed survey. But next door, about 20 miles away, we have the Bornite project, which has been a center of a lot of exploration over the last few years, in particular with the monies, the option dollars that have come from South 32. We drilled in 2017 and 2018 about 25,000 meters and 25 holes, basically on the down dip portion of the deposit. We'd previously outlined an open pit about 125 million tons of just right around 1% copper, and then down dip in a potential underground mining scenario. We've got about 58 million tons at about just shy of 3%. So that the 25 new holes that we've drilled in the last 2 years will obviously expand the resource, and that's what we're working on right now. There's a grade times thickness map showing the distribution of those drill holes. We've released results now. This was one of the better results: 16% or 16 meters of 5% copper and 0.2 cobalt. Very, very good grades. Obviously, that's roughly the area of the existing resource, and then that's going to be expanded when we do the resource update, probably by the middle of late February here. And that's both cobalt and copper. I don't have a lot of time, but there's a significant amount of cobalt there, and we're working on the metallurgy right now. Bottom line, there are not a lot of high-quality deposits. We have to thank BMO for making this chart for us. On the vertical axis, I'll remember, Joe. On the vertical axis, you got grade. Most of the copper deposits are fairly low grade. This is a zinc asset, but it was a very high quality zinc asset owned by Arizona Mining. Roughly the same in terms of a metal value from an NSR basis. And of course, they were bought recently last year by our business partner, South 32. So not too hard to connect the dots and see what our future is going to what's in store for us in the future. So I'll stop there. We have got a booth across in the corner there. Come talk to myself or Pat or anybody else in the group. And I think we've got questions and answers after this. So thank you very much.